Hey, welcome to Mortgage Minute for February 15th, day after Valentine's Day. Well, last week we had the rates go up. We knew that was coming. It hit us. Went up. Some were surprised it went up as high as it did. 20, 30, 40 basis points depending on the lender. Now, that's happened. So the next question is, should we take a variable rate or should you lock in? If you missed last week's rate hold and you didn't get in at 3.89 or 3.69 and you're currently looking at your options of getting in and locking in at 4.14, it becomes a different conversation. Should I take 4.14 or 4.15 today, or should I stick with a variable rate at prime minus 75? Well, it's interesting. Royal Bank came out with an announcement and they said that they expect that the prime lending rate will go up by a full percentage point by the end of 2011, and this is really important, they expect it to go up by another 1.5% by the end of 2012. So if you're doing your math, today the prime is at 3%. That means it's going to go up to 4.5%, according to Royal Bank, by the end of 2012. Well, everybody who's sitting there today is saying, well, I can get in today at 4.14. That looks a lot more attractive than a prime at 4.5. But be careful. You know, we did some math on this, and if prime doubled over the next 5 years, went all the way up to 6%, and you set your payment as if you were paying 4% interest rate, you know, you can get a prime minus 75 today, which on the surface, with prime being 3%, means you're only paying about 2.25% today. But if you could set your payments as if you were paying 4%, the amount of extra money that you pay off the principal would actually work out more in your favor to take the prime minus 75 today rather than locking in at 4.14%, even if prime went all the way up to 6%. That's a lot of numbers. So if you're confused, not sure what to do, send us an email, give us a phone call, peterkinch.com. We'll be happy to walk through your numbers and look at your personal situation, because everybody's situation is different. So whether you should lock in or float really is depending on your personal preference, because at the end of the day there's a comfort level attached to all this. And even if you didn't lock in last week and you have to pay 4.14%, guess what, folks? That's historically low interest rates. So don't panic. Don't buy into the hype. By the way, March 1st, the Bank of Canada meets on March 1st. Look for lots of media hype around rising rates. But give us a call to find out what's the best decision for you. Thanks. That's the Mortgage Minute for February 15th.